Hello, greetings. Welcome to Dividend Blasters. This is our 80th video. Topic today, another week in selling covered calls. I'm going to give you an update. Also going to share with you a little bit more that I have been thinking about and looking to apply as I set the strike price. First, disclaimer, I'm not your advisor. This video is for information and education. It reflects my own personal opinions, research, and experience as an independent investor for more than 30 years. So please do your own research and consult a financial advisor prior to making major financial investment decisions. So one thing I'm going to talk a little bit about is moving averages. And I did not really look closely at incorporating moving averages this past week. I will say, however, I did well. There were no assignments, so I did 28 trades. 16 of them expired Friday, and all 16 of them expired worthless, which was good. There are 12 that are outstanding, 6 that will expire on April 4th, and 6 on the 17th. But anyway, that's I'll get to that a little bit more later. But what I'm going to do is show you what I did, how I did with the 16 trades, and I'm also going to talk a little bit about 10-day moving average and 50-day moving average for some of the longer trades. So what are moving averages? These are widely used technical indicators. They're used. They're basically used to provide insight into market trends. They're very helpful. And so basically, the rules of thumbs are these. If a stock price is consistently above a moving average, it indicates bullish momentum. If the stock price is consistently below the moving average, it signals bearish momentum. Why am I telling you this? The reason why I'm telling you this is an important piece of information to look at in addition to the Greeks, like the delta, but basically to look at maybe a 10-day moving average or a 50-day moving average, or even longer, depending on the length of the trade. I would say that it is probably prudent when you're setting your strike price to look at the moving averages. And if you are trying to avoid assignment, you're selling covered calls, it's advisable to set that strike above the moving average, which I have done basically just by virtue of leveraging the delta Greek. But this is another piece of information I'm going to share with you what that looks like. And then related to that are resistance levels and moving averages. They often act as a resistance level or dynamic support of movement. So, for instance, in an uptrend, prices tend to bounce off the moving average, providing buying opportunities. In a downtrend, the moving average can prevent breakouts, signaling selling pressure. All right, and we can talk more about that. I just wanted to introduce that here so we can begin to think about that as we move forward. So, this past week, I did sell covered calls, and I collected $1,948 in premiums, less fees. That came out to about $1,930.40. So the last 5 weeks, that would net over $12,309.68. And just if you haven't watched these videos before and you haven't listened to me, I am a longtime dividend investor. I'm also a growth investor, stocks and ETFs. And I love dividends, and I love to build my holdings and grow my dividends. This is a wonderful complement to earning dividends because basically you are generating additional cash, additional income. You can take that cash out, you can use it to pay your bills, but you can also go ahead and reinvest it in your holdings. It's like another dividend. And I will tell you that my covered call premiums are growing faster than my dividends. So I wanted to share that with you. If you were to look at the average weekly dividend for what I've done, I would be averaging about 0.73% yield that I'm adding in premiums. Monthly, they would translate to a little under 3%, 2.93%. I've also shown you what the projections are. So the average weekly is about $2,568. Average monthly would be about $10,271 and some change. If you were to project that out over 12 months, that's over $123,000. So just really getting into this, and I've been doing these for a while, but more in a concentrated weekly discipline action over the last 5 weeks. So I'm focused and I'm committed to doing this weekly, and generating more cash flow. So I will be talking more about this. So let's see. What was the first one? The first one was Amazon. You can see that Amazon, I set that strike price at 207.50, and I collected $47.34 in net premiums. This expired worthless on Friday. Obviously, I'm keeping the premiums no matter what, but I'm keeping the holdings. I can go ahead and do this again next week. And I basically, for a lot of these, have been doing weekly. There's a couple where I am doing them monthly, because that's basically the requirement. And I'll get to that in a little bit. Now, I did mention moving averages. So I think that this is interesting. So, for instance, for Amazon, we can look at moving averages, and I get this information from Seeking Alpha, where I'm an affiliate and a partner. That's a great resource. But the 10-day moving average for Amazon is 197.94. So we know that it closed below that, 192.72, which is great, because I set that strike price. We'll just go back at 207.50. So it was very safe. There was not likely to be an assignment. So I'm adding this piece of information here because what I am after is maximizing, optimizing my premiums collected, and I don't want to leave any money on the table. So I want to set it at the right. I want to set the strike price at the right price. I don't want to set them too high because that compromises my premiums. It's going to reduce them. I want to set them at the right price. So basically, the last price is 192.72. That's what it closed at. It was about 2.6% less than the 10-day moving average. I set that strike price at 207.50. So the question I'm asking myself is, well, I used the delta. I wanted to get within zero point 0.3 or less in the delta Greek metric, but my what I'm wondering is maybe, and I understand we had kind of a dip the last few days of the trading week. Did I set this strike price a little too high? If I had come down a little bit, if there was that strike price available where I could go down to 205 or 202.50, I might have gotten a little bit more of a premium. So that's why I'm introducing the concept of the moving average here. So anyway, we're going to be talking more about moving averages moving forward. Next one is Broadcom. So Broadcom, that strike price was set at 197.50. I collected $53.44 in net premiums. This option expired worthless because it closed well below the strike price. So let's see. 10-day moving average was 186.08. It closed well below that, 169.12. I set that strike at 187.50. So this is an interesting case in point. When I sold the option, the 10-day moving average, which I didn't look at, was only slightly below um, the strike, and that's what I set it at, and I think that's the prudent move here. But look at what happened at the end of the trading week. It went way down to 169. Now I would not set a strike price on this trade like at 170 or 170. I wouldn't do it. Not considering where I started. There was no way for me to really predict where the momentum was going to go. But that just goes to show you that these trades can kind of take on a life of their own. All right, next one. Next one is energy transfer. I sold 2 option contracts. I set that strike at 19. Now, this one is still an active trade. Okay, I did collect 1887 in premiums, but this isn't going to expire until April 4th. I did this late last week. Wasn't gonna wasn't gonna be a 1 day trade because you really can't collect anything. So I set it for the end of next week or next Friday. We're gonna watch this thing to see where it goes. Now again, I set this at 19. It closed at 1871. Let's take a look at the moving averages. The moving average, 10-day moving average is 1883. So I set that strike actually just right above the 10-day moving average. And the last price that it closed at 1871 is very close to the 10-day moving average. It's also close to the strike. So I'm going to watch this closely. I don't want these to be assigned. What I may do, and it's a tactic, I may roll up. I could extend the contract period. I may actually increase the strike. So that would necessitate me giving back some of the premium um, as I close the first option trade, but I get some of it back in the second one. So we're going to watch this. We'll see. Next one, Coca-Cola. This is another active trade. I set that strike at 72. I did collect $28.44 in premiums. Um, Typo at the bottom. This option is not expired. It's an active option. It has not expired. Um, this one will close April 4th. So we will see where this one goes. Let's take a look at the 10-day moving average of 69.60. The last price closed at 70.37. So this stock is moving in a bit of a bullish trend. It has gone above the 10-day moving average. It's about 1.1% above that. Now I set that strike at 72. I'm going to watch this closely. Coca-Cola is a very gentle moving stock. I don't think that the price is going to breach the strike. I really don't, but I'll watch it closely. We'll act and respond accordingly. Next one is Nvidia. So with Nvidia, I sold 6 option contracts, all covered calls. I collected $303.12 in premiums. These expired worthless on Friday, so I keep the premiums and I retain the holdings. I can go again another day. Now I set 2 strikes. I set one at 117 and one at 118. They both closed in that I want to say 113 range. But let's go to the next page, and you can see that the 10-day moving average is right below the strikes. So I would say that I made a good call setting the 117 and 118 strikes. We set these at 116.57. It did dip. No way to really predict that. The market was really in a downward trend last couple of days. It closed at 109.67, so that's about 6% below the 10-day moving average. All right, next one is Pfizer. Pfizer is an active trade. I did set that strike at 26, and it's still going. It closed at around 25.21, so it's kind of close. But this again is also not a volatile stock. It's very slow moving. I collected $22.87 in net premiums. This is going to close next Friday, April 4th. Taking a look at the 10-day moving average, it's 25.82. It closed at 25.21. So that 10-day moving average is just a little bit below the strike that I set. Now, I use the Delta Greek, which I think is a wonderful indicator. This, to me, also is another wonderful indicator. And I'm going to use them both very likely in order to triangulate to get that best strike price. I'm trying to optimize options premiums on a weekly basis. All right, next one. So this one here is going to be a little bit different. And as you know, I've been trading this ETF. It's QQQM. It's the NASDAQ 100 ETF by Invesco. I sold 6 covered calls. I collected $1,015.98 in premiums. This one isn't going to close until April 17th. I'm going to watch this closely, but you can see where I have that strike price. I have it way above at 205. All right. And I got in, below 200. I want to say 198.67. So, and you can see there was a downward dip. And how did I choose that strike? I was looking at the delta, and I was looking to get a 0.3 because I want very little probability um, of there being an assignment. So let's take a look at what I looked at here is the 50-day moving average because this is a longer trade. So the 50-day moving average is 209, 13. Let's go back. I set that strike at 205. You know, given the information, I may have actually set the strike a little higher. But I guess I got a little bit aggressive here. I wanted to get more premium. So there was a dip. I am lucky. It closed at 193.08. But again, there's about uh, two and a half more weeks here to go. Um, Now the last price was about 7.7% below the 50-day moving average. So I'm going to watch this closely. It seems to be in a downward trend, but with the Nasdaq and the tech stocks, they are a little bit more volatile. QQQM is not that volatile, but maybe compared to VOO, it's a little bit more, but it's an ETF. So we're going to watch it closely. I don't want to give back that premium. I like it over $1,000. I want to keep it. And I prefer not to alter the trade. That's really my best approach, but I will to avoid assignment on most of these. Next one is Taiwan Semiconductor. Um, I set that strike at 177.50. I collected $55.34. This one expired worthless last Friday. There were no issues there. And you can see, again, here's another example of the stock price going down later in the week. So my question is, did I set it too high? Um, and I'm looking at the 10-day moving average as an indicator. And the 10-day moving average was 174.64. I think 177.50 is a decent strike price. I think it's prudent. Again, I want to be above the 10-day moving average. I don't want to be below, but I want to set some space here. And I think that puts me in a safety zone, if you will. Now you can see that last price was 165.25, about 5.33% below the 10-day moving average. All right. UPS. So here I did two covered calls, and I set both strikes at the same price. And why am I showing them separately? Because I have multiple accounts. And also let me say I'm not writing covered calls on every single holding that I have. No, I'm doing this on a subset of some of my portfolio. And as I get more um, savvy and get better and become more of an expert, where I can become an expert in trading options like I am with dividends and also stock and ETF analysis, I'm going to start to do more covered calls on more of my portfolio. I'm using a smaller amount right now. So basically, I collected $46.88 in net premiums. I set that strike at 113. This thing expired, worthless. So got the shares, I got the premium, uh, and basically I set that strike at 113, and you can see where it expired. This thing expired below 110, and you can see the delta again. It's below zero point 0.3. It's very safe, but look at that 10-day moving average, 114.39. In retrospect, I may actually have gone back and set it higher. But I guess the market worked in my favor here because there was no assignment. That last price closed at 109.66, about 4% below the 10-day moving average and below the strike. And again, I think doing this in a more methodical fashion as I build my methodology, I will very likely be setting its strike above the moving average, because that's the objective here. So the number one objective is to avoid assignment. Number two objective here is to optimize your premiums collected. So in terms of prioritization, next one is Visa. Well, here I collected $79.34 in net premiums. I set that strike at 347.50. So this thing expired worthless, and I've got the shares, got the premiums. Um, it closed at 342.50. So when I got in, it was around 342.85. So it was very, and what I love about Visa, it's not an aggressive performing stock, but it does keep going up nice and slow. And I think that's really what you want with covered calls. You want a slow, moderate, mild bull market, flat to bull, flat to bull. That's really what you want. So here, the 10-day moving average is 340.97. So I think that strike I picked was beautiful, just perfect. The last price was 342.85. So that's a little bit above that 10-day moving average. All right. VOO. Well, this one here, I collected 192.66 in net premiums. You can see I set that strike at 530. I got in around 526, 17, and it expired way below that. It expired around 510. So you can look at the delta. It's 0.245. I think that is a safe delta when I made the decision on the strike. But let's take a look at the 10-day moving average. 10-day moving average is 521.56. So, let's look. So the strike was 530. I guess what I'm wondering is maybe I could have even come down a little bit more with VOO, and maybe gotten a little bit more premium because again, nobody can predict these downward movements over 1 or 2 days, but maybe I can get a little bit sharper in my calibration of picking a strike. All right, Verizon. So Verizon, I collected $15.44 in net premiums. This is an open, active options trade. It's not going to expire until April 4th. I sold one contract, strike price 46, and it closed just past Friday at I want to say 44.93. So got in right around 45.11. Again, this is not a volatile contract. It's up and down, very little, a lot of sideways movements. And you can see that that Greek is around 0.24 for the delta. Look at the 10-day moving average. It is uh, 44.07. So, here the price actually closed the week at 44.93. It's actually above the 10-day moving average. So I'm actually going to watch this closely. With that strike of 46, I'm going to be watching it closely. I may intervene on this. I may roll it up. We will see because it's a small premium. I'd rather go back, give back some of the small premium, extend the contract, or even increase the strike. See how that goes, just to keep the shares. And it's for some of these, I buy 100 share blocks of Verizon or Pfizer, or 200 of Energy Transfer. I got a couple hundred of some bigger ones like you know. UPS and Walmart. I've got these because they're good quality dividend stocks, but they're also ideal, I think, for selling covered calls and getting that extra cash in the portfolio. Okay, so the last one here is Walmart, and I sold two of these, and I set that strike at 86. And for both of these, across a couple of different accounts, I got in a little bit under 86. And I felt very comfortable with these because Walmart is a slow moving stock. I kind of look at it like, well, it's kind of like a Visa, but it's even slower. So I felt comfortable doing that. And you can see that the deltas are both below zero point 0.3. And it expired worthless. Both of them did around 85.15. So it actually went down a little bit. But let's take a look here. at the 10-day moving average 85.94. So it closed at 85.15, just a smidgen below, less than 1 percentage point below the 10-day moving average. I set that strike, I think, really beautifully. I'm happy with it because I got as close as I could just based on the delta, um, and captured those premiums. Now that I'm going to be using 10-day moving average or 50-day moving average or other moving average, depending on the length of the trade, I have another tool in my toolkit. So that's something to think about. So looking at the summary here, as I mentioned, $1,948 in net premiums collected, or premiums collected. With a net, it's $1,930 and 40 cents change. Uh, and as I mentioned, did 28 trades, 16 of them closed this past Friday. No assignments, so I'm very happy with that. I'm very proud of it. I do have 12 outstanding. 6 of those are going to close this coming Friday, and there are a handful of stocks that I mentioned. And the other 6 are going to be the QQQM ETF, and those are going to close on the 17th. All right. And, just basically looking back, you can see that the net collections after fees, $12,309.68. And I've projected, I already went through this at the beginning. If I keep doing this and I average what I'm averaging every week, and I do these every week, the net collections for 12 months could be over $123,000. Now, you know what? Life happens. Sometimes, markets take a turn or we make decisions that are not optimal. This may or may not happen. Could do more, could do less, but we're going to watch it closely. And before I close, just wanted to reiterate that I am an affiliate partner of Seeking Alpha. So if you are interested in subscribing, click on the links that are shown here, and I'm also putting them in the comments uh, field. And you can get a 7-day free trial to the premium membership. You can also get Alpha Picks, and depending on which one you want, you will get a discount. You can also get both. That's called the bundle, and you will get a discount. And I am not only an affiliate partner, I am a subscriber and a longtime customer, and I do not do any major investment decisions without referring to Seeking Alpha. And check me out on social media if you're interested. I have more content on X, on Instagram, and on Facebook. Folks, I hope you enjoyed this. And if you did, please give us a thumbs up, share the video with a friend, hit that notification bell so you are notified when our next video comes out, and subscribe to this channel. We want you. Have a wonderful day. God bless.